we have embarked on a new era of deglobalization. This is something that nobody alive today has lived through. For decades, our world has been moving towards further and further globalization. But now the world's leading experts on this topic are starting to agree that we very well might have already seen peak globalization and are now moving on an inevitable road towards deglobalization. Now, one of these experts is Peter Zeihan. Now, he is somebody who just wrote a book that is one of my favorite books I've read in a long time. Now, I have to read a lot in order to find great books. Everybody does, because to be honest, there's a lot of garbage books out there, and so it's just a numbers game. But this book, it's called The End of the World is Just the Beginning by Peter Zeihan. It is one of my favorite books that I've read in a very long time, and it's mapping the future deglobalization and the reasons for it. Now, the main driver behind this is going to be population implosion in the countries that have driven the most growth. And while most of these predictions are doom and gloom towards the United States, and that's something that I'm constantly inundated with, this is actually a little bit of a breath of fresh air, because it doesn't necessarily mean that it will be bad for the United States, and I'll tell you why in a few minutes. Many of the world's populations are heading towards a population implosion. You can see by this graph, the population in China specifically is extremely old. They are on a path now that is, by many measures, irreversible. They've got an aging population, and they will not be able to continue growing the way that they have. They don't have the young people to support it. And this is extreme in China, but it is also true in almost every developed nation on Earth. Even the birth rate in the United States is nowhere near where it needs to be to support growth. Now, that's not a doom and gloom prediction for the United States specifically, and I'll show you why in a minute. Essentially, we are seeing population fall off a cliff in the countries that have driven most of the world's growth over the past few decades, which means that growth driven by those countries won't be there. That means allegiances are changing all around the world. For the past few decades, we've seen the United States ensure free and open global trade around the world with its military, and that is starting to slowly come to an end as well. So we are seeing alliances like BRICS form, where we're seeing new relationships, as the BRICS nations are slowly trying to exclude the West and move on with each other. And the West is doing the exact same thing. Just look at the sanctions on Russia. As relationships change, this also means that we're going to see a big slowdown in global growth, because we're going to see less free and open participation between the entire world. As this happens more and more, what you'll notice is that whoever owns the means of production of the stuff that people need to buy no matter what, they'll see enormous benefits from this. This happens in individual countries as well. An example I give many times is in the Weimar Republic during the collapse of their currency, hyperinflation. The people who got rich, because not everybody got poor, the people who got rich were the ones who were the farmers. They were the ones who continued to produce the stuff that people had to buy no matter what. And it's the same in countries, it's the same around the world. The people who own the means of production of the stuff that people continue to need no matter what, real resources, food, commodities, energy, those are the ones who stand to benefit the most during hard times. Now, we don't have time to go into all the details, but this puts the United States in a fairly good position going forward for the next few decades. Number one, we've got north and south waterways, best world-class north-south waterways. That means cheap, efficient, moving resources where they need to be. We also have world-class infrastructure, west to east rail. Again, to get stuff where it needs to be cheaply and efficiently. We also are a net food exporter. We're one of the few nations on Earth that produces way more food than we actually need to eat. We also have a much lower population density compared to the amount of space that we have, meaning we can support a much larger population, something that is key to economic growth. We have a geography that makes it almost impossible for a military invasion, not to mention the strongest military on Earth, fantastic relationships to the countries north of us, Canada, south of us, Mexico, and then finally, yes, our birth rate has been below replacement level for decades, since the 70s, but we have a culture of immigration. And to the extent that we stay free and open and a good, attractive place, we will continue to support growth through immigration. But this also means that there will be a big shift in where we get the stuff from that we need that we don't already produce ourselves. It's well known that Russia is a huge producer and exporter of raw materials, of energy, of commodities. And these are the things that we're going to start to see shift to the West as we ramp up our capabilities so that we no longer have to rely on the old rules of globalization. And that's why I've partnered with CLLXF Mines, who sponsored this video, because they are exactly this, a company who owns the means of production of commodities, the things that we continue to need, and they're located in Canada. CLLXF is a company that has massive exposure to copper, zinc, and silver, metals that are dominated by Russian-controlled producers. Now, I'll get into the story of CLLXF in just a moment, but I want to show you something on their chart. They were trading down here in this range of about 40 cents, but in early 2020, all the way down to about 25 cents. When they drilled and came out with their drilling results, their stock price popped up to this 250, this 180 to 275 region. Massive increase. And then when their drill results were confirmed with further clarity, we saw another massive pop in their stock price. This is a company that moves drastically on news, on their drill results. This is a company that already has great drill results, but the market is looking for confirmation that these drill results will translate into future production. Now, as you know, with mining companies, jurisdiction is one of the most important things to look for. We already looked top down and we know resource plays, mining for commodities, the things that people need no matter what. Top down, macroeconomically speaking, is where you want to look. Bottom up, when you look at the miners, jurisdiction is huge. So we know that stuff is moving towards North America. One of the reasons for that is because in Canada, it's one of the most mining-friendly jurisdictions on the planet. Not to mention that, but you also have to look at the infrastructure around the actual mine. CLLXF specifically is located right next to roads, right next to power, right next to a city, and this is big, right next to an old mine called the 777 mine. The 777 mine had been in operation in this Flin Flon district for 100 years, but just last year in May of 2022, they shut down production, their mine went dry. Now, this is a problem for the town because of the 7,000 people in the town, about 5,000 of them are employed directly for or indirectly for this 777 mine. Now, normally there are issues with the locals. If you're trying to install a mine somewhere and you're trying to ramp up production, sometimes locals, sometimes there's reservation issues with Indigenous, Native Americans. However, this is not the case here. The people there desperately want CLLXF to succeed. Not only that, but the old company, the old 777 mine, if they have to go through something called reclamation, it'll cost them potentially hundreds of millions of dollars. But if CLLXF can get up and running and start producing, they will not have to do this. So the old company has a huge skin in the game to want CLLXF to succeed here. Now, the next thing that I look for in companies like this is the leadership team. I actually personally know CEO and founder Max Porterfield of this company, of CLLXF, and between him and his family, they own 10% of the company. That's huge. Between other managers and associates, they own up to 40%. Another 40% though, and this is the big piece, is owned by institutions. You want to see big institutional ownership. This company that you're looking at here is Altius Minerals. They are the largest institutional owner of CLLXF, and it is a big deal for one reason. They're very, very good at this. They're one of the best companies in the world because they do so much due diligence. It actually takes them 18 months to make a decision on whether they're going to invest in a company or not. And they pulled the trigger on CLLXF. They invested $500,000 in CLLXF, but the key thing here is it was at a much higher price than the stock is at right now. In fact, when Altius invested in CLLXF, it was about $2.30 per share. And so when Altius made this investment, they took 18 months and thought, this is a screaming deal and a potential for a massive moneymaker here. They're buying it at a much higher price than what it is at today. The difference between institution and retail is this. A retail investor will take a look at a stock, they'll buy it, it'll go down, then they'll say, I'll sell it when it comes back up to break even, and then they'll get out, and then it'll go on and it'll keep on going up from there, and the retail investor never makes any money. Institutions do the exact opposite. They do their due diligence, and then they figure out what price it's a good deal to own the company at, and they hold it until they make money. So seeing that CLLXF was invested in by Altius at a much higher price than it's at right now, specifically by Altius, who's one of the best investors in this space, that's a big deal. And then finally, we have the geologists, and they've got an all-star team of geologists here. One of their geologists, Mike Muslowski, is a 2011 inductee into the Canadian Mining Hall of Fame. Yes, that's a thing. Another, James Pickle, has over 40 years of VMS exploration. Not only that, but he's a recipient of the PDAC Bill Dennis Prospector of the Year Award for his role in the discovery of the 777 mine. That's right, the one right next door that just shut down to CLLXF. These days, copper is in pretty much everything. Russia is the 4th largest producer of silver in the world. Zinc, one of its largest uses, is for galvanizing steel, and it is one of the largest, most commonly used metal in the world. All of these metals are ones that CLLXF has exposure to here. And like I mentioned earlier, when times get tough and deglobalization continues to kick into gear and we see global allegiances changing, the wealth moves from hands into the hands of the people who control the means of production of the stuff that people still need no matter what. Of course, this isn't investing advice or recommendation. Do your own research, and I do own the stock myself. These are simply some of the things that I look for when I'm investing. And we can either look at the world around us falling apart, live in fear, run and hide, and never make anything of ourselves, or we can continually educate ourselves, look at what's happening, and know that at least somewhere in the world, wealth is changing hands. And if wealth is changing hands, look at where it's going, copy the big money, and know that in hard times, people continue to buy the things that they have to buy no matter what. And the people who own the production of those resources tend to get wealthy even when other people are not. As always, really appreciate you guys. Thank you so much for watching. Have a great day.